Welcome to Extraclass Online Academy, your #1 hub for free quality education, anytime, anywhere. We offer a wide range of online lessons covering ZIMSEC subjects from Form 1 to Form 6, Cambridge IGCSE, South African Matric from grade 10 to 12, and many other valuable courses to help you succeed academically and beyond. Whether you're preparing for exams, catching up on classwork, or learning something new, we've got you covered, and the best part, it's all absolutely free. No matter where you are, in Zimbabwe, South Africa, or across the world, education should be accessible to everyone. At Extraclass, we believe in learning without limits. So go ahead, subscribe, explore our lessons, and join thousands of learners already upgrading their knowledge the smart way. Let's grow together. Extraclass Online Academy, learn free. Learn smart. Learn anytime.
Hello grade 10s, welcome to Extraclass. Today we are going to be looking at the National Credit Act. So the National Credit Act, or NCA, was introduced to provide both credit providers and credit applicants with clear guidelines regarding their rights and responsibilities. This act applies to all businesses that sell on credit. So the purpose of the National Credit Act is as follows. It promotes the development of a credit market that is accessible to all South Africans. It also encourages responsible buying so that people don't just take credit out when they are not financially capable of repaying. It avoids over-indebtedness and fulfillment of credit providers and consumers. Addresses and corrects imbalances in negotiating powers between the consumer and the credit providers. It discourages reckless credit granting. So reckless credit granting by credit providers. Educate consumers on making the right choice when applying for credit, and gives guidelines within which the different kinds of credit transactions must take place in South Africa. Now, let us look at the consumer rights as enshrined in the National Credit Act. What are the rights of the consumer? So consumers have a right to apply for credit. So every consumer can apply for credit. They have also a right to receive information in the official language. So whichever language that is an official language, you can request information in that language. They have a right to be protected from unfair discrimination in granting credit. They have a right to be given reasons why a credit application was refused. They have a right to be informed about the interest rate and any other cost of the proposed credit transaction. So this is critical because consumers need to plan and to budget. They have a right to receive a copy of credit contract and a replacement copy when the consumer asks for one. Suppose they lose their copy, they have a right to request for another copy again. They have a right to apply for debt cancelling if a consumer has too much debt. Right. If consumers have got rights, then the credit providers has got also rights, because the National Credit Act is there to protect both parties. So the credit providers have got rights to conduct a credit assessment to ensure that the consumers can afford the debt. They have a right to check on the most recent payslip or bank statement to ensure that the consumer has an income or has a regular income. To check the consumer's monthly debt repayment obligations in terms of credit agreements. They have a right to consider other expenses of the consumer while looking at the creditworthiness of the consumer. And lastly, they have a right to consider the consumer's debt repayment history to look at how did the consumer paid their debts in the past. So suppose there is a disagreement between the consumers and the credit providers, there are some remedies as outlined in the National Credit Act. These include the Consumer Tribunal. The Consumer Tribunal is responsible for reviewing decisions made by the National Credit Regulator, the NCR, and the National Consumer Commission, NCC. We also have the National Consumer Commission. What is this commission? The National Consumer Commission is responsible for promoting compliance with the National Credit Act and CPA through advocacy, and this NCPA is the Consumer Protection Act through advocacy and enforcement. It protects the economic welfare of consumers. So the National Consumer Commission is responsible or is more biased towards the consumers. Then we have the Ombud. The Ombud is an independent person with authority and responsibility to receive, investigate, and formally address complaints with consumers. So, since the implementation of the National Credit Act on businesses, there are impacts that has happened since the promulgation and the implementation of the National Credit Act on businesses. We are now going to look at these impacts. We have both positive and negative impacts. Let us start with the positive impacts. So, the National Credit Act lowers bad debts, resulting in better cash flow, more specifically to the credit providers. It also protects the business against non-paying consumers. How? Because the credit providers have got the right to look into the consumer's financial status before granting the credit. Increase cash sales, as credit can only be granted to qualifying customers. So not everyone can qualify for credit. So in that regard, it means those who cannot qualify are forced to buy on cash. It prevents reckless lending by financial institutions. They don't just give credit to everyone. Ensures that businesses settle their debts on time so that they can obtain good credit score, because they still want to borrow. So in that regard, they are forced to pay their credits on time. Ensures that credit process is transparent. For example, both the businesses and consumers know their responsibilities. So that means there is no discrimination. So there is also negative or disadvantages of the National Credit Act. Businesses are forced to budget to keep more cash or have cash on hand for stock purchases, because when you sell on credit you don't get cash. So the businesses have to look for more operating capital. Businesses can no longer take the risk of selling poor quality goods at high prices. So it was happening that businesses can sell poor quality goods at high prices through credit. Business can no longer carry out credit marketing. Leads to loss of sales, as many businesses may no longer qualify to buy on credit. Yes, those businesses that are not credit worthy cannot buy on credit but on cash. So the people who are selling on credit have lost sales. Businesses can only buy limited stock as credit is not available, resulting in loss of customers. Complicates the purchasing process because of too much administrative work in the credit providing process. The purchasing department must know the terms and conditions of credit granting and the National Consumer Act. It may take longer to purchase goods, and this could influence the overall efficiency of the business because the credit process is a bit long. The Act compels businesses to sell quality products, or they may be forced to reimburse the customers or consumers.